Hi, this is Cormac Kinney. I'm the founder and CEO of Diamond Standard. Today's December 11, 2023. I want to give everyone an update on what we're seeing in the diamond market and how it impacts the Diamond Standard commodities. The main story, which I think you've all seen in the last month or so, is that diamond prices are steadily rising. And first I want to put this into context because, why are they rising? Why did they fall before then? But if you look at this chart, you'll see that diamond prices consistently fell from February 2022 until October of 2023. That's very unusual. It's surprising, and there's a lot of reasons for that. And the main one is that if you look a little bit to the left of that fall, you see diamonds also rose by about 40%. And that was during COVID, and it was really driven by COVID. And the main driver of that was that people were home and shopping. They weren't out taking vacations or going out to eat. And the sales of jewelry really took off during the COVID years. Towards the end of COVID, a couple things happened. One, the mines kept producing at that elevated rate that they were trying to catch up with sales. And when we came out of COVID, we all expected China to resume buying diamonds at the rate they had been, which is a growing rate. But China stayed in lockdown a lot longer than the rest of the world. And when they did come out of COVID restrictions, they were in a depression. And so that demand never materialized. There was excess supply. At the same time, that's when Russia invaded Ukraine. And Russia began dumping diamonds on the market. They supply about 30% of the world's diamonds. And to fund their military campaign, they were raising cash. They were being constrained a lot in oil, but diamonds were still something they could sell. The other thing we learned, and this is very recently that we realized this, and it came from the earnings call with Signet from about a week ago. Signet has realized that engagements were down very substantially following COVID because the engagement cycle had been broken. During COVID, people weren't dating the way they had been before COVID. And so now they were seeing 2 years later, there weren't nearly as many engagements as there had been. But recently, that's been starting to pick up, and we'll talk about what's driving a recovery. So in this chart, you'll see that diamond prices bottomed out in October. They flatlined, and then since November, they've risen fairly strongly until today, which is December 11. And a couple things have happened that have driven this inflection point, this bottoming. And what's most interesting, I think, is that we've really found a hard bottom. And that is because the diamond mines have refused to sell diamonds at the prices that they were getting in September, for example. And De Beers, among others, canceled their sales. They went from $600 million a month to $80 million a month in sales, simply because the replacement cost for them to mine diamonds to sell does not cover their expense and overhead. So they said, we're not going to sell. We'd rather cancel the sales. That floor has been consistent with other diamond miners, which canceled their sales, but also in the diamond cutting industry. And you see from several of these articles that the Indian industry got together and agreed to ban the import of more diamonds because they couldn't generate enough income from cutting them to make it worthwhile. So these activities, these constraints on supply, have had the impact of driving the prices up. But now it seems that these prices are going to continue to rise, and there's an analyst consensus on this fact. So number one, as I mentioned with Signet, they had an earnings call. Their stock is up 49% this year, and there was a huge jump last week when they announced their earnings. And among the things they announced was that engagement sales were rising. They see that the world is coming out of that lull of engagements because of COVID, and they're seeing an increase in that. Number two, the other thing that's driving diamond prices up is longer-term macro thesis, which is that the mines are running out of diamonds. In fact, the last mine in Australia closed last year. So, and we're going to talk about that in a second because we have a chart that explains that in a little more detail. But overall, the other major impact on diamond prices is investor demand. So we're seeing the advent of a number of diamond commodity products. We have the spot commodities. We've recently gotten approval for futures and options, and we expect other investment products like funds to begin becoming available to investors in the near future. So we talked about Signet. They're up very significantly. Analysts are agreeing that they expect their demand to continue to rise. The other indication of support from analysts is that Petra Diamonds just got a $93 million credit facility. It was very, very difficult for them to get credit because diamond prices were falling. But now the lenders obviously believe that diamond prices are going to continue to become stronger. And so they're willing to invest in the diamond mines to provide financing. But the other big news, which you'll see from several of these articles that came out last week, is that the G7 countries, including the United States and the EU, they have passed broader sanctions against Russian diamonds. You may have heard that the US and Europe sanctioned Russian diamonds before, but that's only for the direct purchase. For example, very few Russian vendors sell diamonds directly to the diamond district here in New York. The diamonds go through India where they're cut, and then they become Indian products, and then those are sold throughout the industry. Those were not sanctioned, but now that's come to an end. The G7 is sanctioning diamonds by source. So if you can't prove that the diamonds were mined in Canada, South Africa, Brazil, anywhere outside of Russia, the G7 countries won't allow those diamonds to be imported into their countries. Russia supplies about 30% of diamonds, so we think that this will actually have a significant impact on the supply of diamonds. You have less supply, you have increasing demand, prices tend to go up. So overall, we think that now is actually a very good time to start building an investment in diamond commodities if you believe these investment theses. If you think diamond prices are going to go up because of diminishing supply and rising demand. We think now that they've finally stopped their fall, this is the right time to get into the market. So if you're not familiar, these are diamond standard commodities. These are diamond standard coins. There's also diamond standard bars for institutional investors. The breakthrough is that these two bars are equivalent. They contain an optimized set of diamonds that add up to an equivalent geology. The carat weights, the colors, the clarities are optimized in every bar. These bars are what's called good for delivery. So it's just like the gold bars that trade on exchanges. There's a standard. That standard is required if you're going to trade those bars on the CME, for example. Diamond Standard actually has an agreement with a CFTC regulated exchange, and we are right now developing